Hello and welcome to Business Incorporated Live on Channels Television. Here's what's coming up in the next 55 minutes. We get an outlook for the Nigerian economy as investors shift attention to interest rates. Kenya Electricity Generating Company reports a rise in net profit from 2.96 billion shillings to 5.3 billion shillings. Plus, we get a check on aluminium prices as President Trump slams 25% tariff on aluminium imports. It's good to have you join us. Let's get straight to the markets now, starting with oil prices. They're up today, driven by worries over disruptions to Russian and Iranian oil supplies. That's due to U.S. Sanctions. So we're seeing another big 1% jump, just like yesterday, 1.37% up for Brent crude, $76.91 a barrel. U.S. grade, $73.31 a barrel. Also up 1.36%. Just like yesterday, we're seeing bullish sentiment in the oil market, and definitely traders still watching out to see if this carries on to about $80. So the stories now, the Nigerian Export Promotion Council has announced that the country's trade volume in 2024 reached 7.2 metric tons, with 20.7% increase in value, totaling about $5.45 billion. According to Executive Director of NEPC, Dr. Noye Ayeni, the council conducted approximately 629 capacity building programs in 2024 in collaboration with the development organizations and agencies to enhance the competitiveness of Nigerian exporters. Dr. Ayeni adds that the NEPC's mandate is to diversify the nation's economy away from oil dependency by promoting non-oil exports. And to gold prices now, we're seeing gold, another all-time high there as investors, they're looking for safety, at this time amid escalating trade tensions after U.S. President announced more tariffs there. So U.S. spot gold, $2,966, just about 40 cents to $3,000 mark. That would be a new all-time high. That's for gold. But we'll see the spot gold futures there. U.S. gold futures, that's holding up. And spot silver down 0.88%. Other metals we track also down. Just U.S. gold futures in the green, nearing that $3,000 psychological level. And now we see as Nigerian police begin strict implementation of vehicle third-party insurance policy. The Nigerian Insurers Association is encouraging more car owners to embrace benefits of the policy. The Director General of the association, Mrs. Bola Dukale, who was a guest on Business Morning, believes that more enlightenment will reduce the incidents on the roads. Take a listen.
Education, as far as insurance is concerned. Some know that indeed there is insurance out there, but a lot do not also know there are benefits for insurance, especially this third-party motor that we're talking about. A lot of people outside there, they feel it's just for me to be able to get my way through the police. Meanwhile, there are benefits for you having a third-party motor insurance there because it covers you, the owner of the vehicle, for the liability that you are exposed to with third parties anytime your vehicle is out there. And these liabilities can range from property damage to bodily injury to even death, when to a motorist, to somebody who is walking along the road and all of that. So it gives a cover, it gives a peace of mind. And when we promise this as an organization, our members live up to the expectations. Our members live up to the obligations of ensuring that happens. We should not be begging on the road. You see a situation where there's an accident and the next thing is that somebody begins to beg you. Somebody begins to say, please, I'm sorry. In fact, some people will go as far as being very comical and say, just kill me because I don't know how to, sort out this. But when you have a third-party motor insurance, that third-party motor insurance covers that liability that you have to third parties anytime that you are on the road, anytime you put your vehicle on the road.
And the Securities and Exchange Commission announced plans to sensitize state governments on investment opportunities in the capital market as part of efforts to drive wealth creation and economic growth. According to the Director General of the SEC, Momotimi Agama, the Commission aims to enhance the understanding of financial markets, investment strategies, and regulatory frameworks among state governments to help them maximize their economic potential. He adds that the SEC will begin engagements with the executive councils of the northern states as the first step in its strategic approach. All right, let's get a sense of what to expect now with interest rates in the first quarter of 2025. And also U.S. inflation rate, that's on the front burner now for most investors. Well, joining us to unpack this, we have Dr. Patrick Jumedia, the head of research, Sterling Asset Management and Trustees Limited. It's great to have you on the show.
Yeah, good to see you, Ladi.
Yeah, so, the first quarter is moving on
we're almost
really
wrapping
fast.
It up. We're almost wrapping it up.
We're almost wrapping up.
Yeah, this is the end of
It was just a few days ago
that we
were
celebrated the
greeting
Happy New Year.
Happy New Year, but it's moving on really fast.
Yeah,
And I think it's almost time to start getting expectations for the first quarter. Now that the CBN has announced dates for the first meeting, of 2025, and it seems it's going to be hawkish again.
It's one might want to be thinking in that direction, but again, if you look at the parameters that I think the CBN will be looking at, one might just be thinking otherwise to say they are going to hold. And the reason is because we've seen exchange rates since the last time they had the MPC meeting till now. Exchange rate has hovered around 1.550. That's the official, and the black market around 1.650 or so or thereabouts. So there's this relatively stability and appreciation in the exchange rate. Then if you look at, first quarter, usually there's this demand factor, low demand, January effect factor, and both will lead to low demand, and again, some sort of fasting period that is around that reduces demand for exchange rate and can also kind of curb demand. So all those factors will play a role in trying to look at, let's see if we can hold it, and then see what is playing out in the international space as well. Putting all of this together, then I think.
So looking at the last quarter of 2024, if the MPC, they're trying to reflect, what's happened so far, especially with the exchange rate, that should be some kind of pass mark.
Of course,
for them. That's bullish.
Yeah. So they've done about 10% appreciation from the last time they had the last MPC. So it's some form of, pass mark, because what they've said is to say, okay, the CBN governor has come a number of times to say, they've been able to attract significant capital inflow because of the high rates, and they've been able to put some level of measures that have put stability in the exchange rate and the transparency issue. Then now the latest is the expansion of the sales of FX or BDCs to the end of May. So these factors have made them achieve some level of progress. So I think
I'm guessing we might expect more, interventions, when it comes to exchange rate policy. But let's take it out now. Trump is back in the news again. It seems Trump cannot get out of the news, at this point.
Every day.
Every day.
Him every day.
Yes, there's something about
that
Trump.
Is bringing on board.
And it's moving markets. So definitely looking at inflation numbers, we're expecting that's coming out for the US. That's tomorrow.
Yeah.
And obviously, President Trump wasn't pleased with the last hold.
That they did.
So
he wanted the cut.
What are you seeing, for this for the inflation numbers coming?
Yeah. So first is to say that there's supposed to be that independency between the president and the Fed or the CBN of any country or the central bank of any country. But again, he doesn't have to be pleased. It depends on what the monetary authorities are saying. I'm sure that despite the fact that he's not pleased, he doesn't want to see higher numbers of inflation as well. So if they hold at that time and they are saying that they are likely to have a high rate of inflation, remember since October, the inflation rate has been going up. I think from 2.4 around October to 2.6, 2.7, then 2.9 in December. And evidence is showing that the one that is going to come out tomorrow is likely to go up. So if that happens, then I'm sure that the Fed, the head of Fed, will be celebrating that, oh, it was actually nice that I had the rate at that time, because if you had cut, now they would not be thinking of coming up to increase it again. I don't think that would be nice.
Right, and definitely, I don't think we'll see the impact of the tariffs, in these numbers. The tariffs so far.
It will reflect, because I think the whole idea of this tariff started in February 1st. That against Mexico and then Canada. So, and if you speak with
and then there was a pause too.
But at least it has started.
Right.
So but it now depends on when that survey, the Fed, when they would have done their survey to determine what has actually happened to prices, over there. If at the time they took that survey, this the pause have not taken place, then it will reflect in the numbers.
Right, and
don't forget that this thing doesn't just change. Even if they pause it, it takes time for it to adjust. Remember that we talk about the lag effect of anything when we talk economics.
Right, and do you think President Trump is worried about inflation, because he keeps coming up with more tariffs, at this point, and that war is still brewing, with most of their trading partners?
I think it's important for people to understand his ideology, and the ideology of what he's saying is America first. Yes, we might go through some form of, hardship. Like we all know that we went through in Nigeria with the exchange rate and inflation policy. But overall, what will be the short to medium term and then long term effect on that economy? So immediately they might see that high numbers, which I'm sure he would have done some form of calculations on. And then you're looking at how long will it take for them to adjust and then for the benefit to begin to come.
Right, and do you think, the MPC be worried, about the trade wars, happening in global space?
They would be worried, because, of course, it will lead to inflation, and they have to control inflation. So they have to be worried. They don't have a choice. That's their major role. If they are not worried and inflation comes back, what would they do? So at that point, the onions go back to them.
So how does Nigeria hedge, against all these trade wars going on?
Yeah, first is to say that if the trade wars probably leads to inflation in the US, what you will see is that the Fed may not begin to raise rates, and if they do, investors will begin to pull out to go to those places because of high rates, and that will drive capital inflow. And the impact of what the CBN governor said they have achieved in terms of capital inflow might begin to reduce, because the reason why we are experiencing that capital inflow is probably because the rate there is low and our rate is high and investors are moving. Then some investors who actually want to move their money from Nigeria will still decide to stay because of the high rate currently on in Nigeria. So, but again, it also creates a lot of opportunities for us as a country, as Nigeria, because of the tariff, people are looking forward to other countries where they can then begin to say, okay, let's move to this country and begin to do business with them. So it depends on how prepared we are as a country, so that we can also take advantage of some of these opportunities that is going to unfold.
Well, I'm talking about opportunities, definitely the risks are there. Are you seeing any risk to the current stability that we see with the Naira?
Yeah, basically, one thing is very certain: the speculative activities of let's say people who are currently trading with it are what is actually making the Naira to fluctuate. And because of the effort of the CBN now, the idea of trying to create that transparency in the FX market, and the idea of extending the sales of FX to BDCs till May, I think that would naturally curb some form of speculation in that market. And hopefully by June, we will begin to enter into the harvest period for agricultural commodities. So if they're able to hold it down up to that time, by June, by the time we'll enter into food harvest this thing for farmers, coupled with the efforts that they've put in place to increase food production around this period, the risk might be there, but very minimal.
So where are you seeing opportunities now? Because definitely investors are wondering, okay, where am I putting cash? Some retail investors, at this point. Would you say go to the fixed income market, or Nigeria's equities market is the place to be?
It depends on how your risk appetite.
Right.
If you have the let's say the bold chest to be able to take the risk in the equity market, fine, you go there. But if you are not a risk taker per se, you want that at the end of the month you get your with your return and all that, you prefer to go to the fixed income space. So it depends on the risk appetite of the investors.
Right, and some investors would prefer risk, at this point, because we've seen how risk assets have, outperformed, even in the global space. So, looking at the Nigerian context now, we've seen the all-share index hit new highs, highs upon highs, trying to tend back to the 106,000 level. Where's the pullback here? Where is that major pullback that markets have rallied for a while normally get?
So if I get your question, what will probably drag the market downwards?
Exactly. Where is that pullback?
The outlook for many people or for many analysts about the Nigerian economy and about this sector is that most of the sectors are likely to do well in 2025. And that outlook is giving some form of positive vibes to investors to say, come, there's opportunities here, let's take these opportunities. Now, except investors begin to see that, this outlook does not appear to be real, and they begin to drag their foot or drag back their investment, that's when we can begin to see the pullback in terms of the all-share index. But for now, I think investors are positive because they are looking at inflation likely to drop, exchange rate likely to be stable, then policies of government likely to be stable and all that. So for now, there's still that drive to say, for now, we don't think nothing is going to hold.
So maybe a new high, at some point, might be.
And don't forget, because the market is just starting now, January, first quarter is usually like that because, like I mentioned earlier, the demand effects, But by the time we get into Q2, Q3, we might be seeing some interesting things, all things being equal.
Well, we'll definitely be watching out for that because at the end of the day, you get that pronouncement, from President Trump, that you see the markets start moving. We're seeing what's playing out with all markets, at this point, aluminium and steel. So I guess it's, we'll just grab your popcorn, at this point, and watch everything play
out. Very
out.
vigilant, in terms of making your decision, because as you're grabbing your popcorn, you're watching the play.
You might miss the trade.
Yes, exactly. So you have to know when to key in, and so that you too can also, when people are smiling to the bank.
So you also smile to the bank.
Exactly.
Quite interesting. Early days, but we'll keep tracking it. Thank you so much, Dr. Patrick Ejumede, Head of Research, Sterling Asset Management and Trustees Limited. Thank you for coming.
Always good to see you, lad.
Good to see you too.
Well done.
All right, we'll take a break now. When we come back, we'll head straight to the markets. Let's get a sense of what's playing out with major global markets that we track. That's in a moment. Just stay with us. We're going to head to the markets very soon, but let's get a check on what's playing out in major economies that we track at this point. We're seeing KenGen, they're recording 79% rise in their net half-year profits. That's in East Africa. That's quite an impressive one there. The Kenya Electricity Generating Company, they've demonstrated their resilience in a changing energy landscape with a 79% increase in profit after tax for the 6 months ended December 31st, 2024. The NSE-listed electricity generator reported a net profit of about 5.30 billion Kenyan shillings, up from 2.96 billion Kenyan shillings during a similar period in the previous financial year. In a statement, the KenGen attributed the improvement to increased operating efficiencies and aggressive cost-cutting efforts. And economists assessing the potential impact of rising tensions between South Africa and the United States on the local economy as U.S. President Donald Trump feels uncertainty among the global investors. Trump and his administration have been vocal in their criticism of South Africa's land reform policies, particularly the Expropriation Act. Since the law was enacted last month, fresh concerns have emerged over Trump's misleading portrayal of its effects on private property in South Africa. Our South Africa correspondent, Innocent Samosa, has this report.
Some opposition parties in South Africa argue that the United States is unfairly penalizing the country due to misunderstanding of the Expropriation Act. But what real economic risks does South Africa face if US investors react negatively to President Donald Trump's rhetoric on the policy? Makwe Maselela, Chief Investment Officer at Makwe Fund Managers, weighs in.
The economic risks are real as the US investors and businesses wouldn't want to be seen as going against their president. We know already we are trying to get the AGOA thing to be extended, and nothing has been done so far. And as we've seen yesterday, that the US president has mentioned that he's planning to announce a blanket 25% tariff on all steel and aluminium imports today. And as a country, our steel industry is particularly vulnerable to this new policy.
Masilela emphasizes that both the South African government and private sector should implement strategic measures to reassure global investors and safeguard economic stability amid rising political tensions with the USA. Meanwhile, Chloe Castle, director of Free South Africa, warns that Trump's stance could weaken the rand and drive inflation higher.
The first concern being a decline in investor confidence that could lead to capital withdrawal from South African markets, weakening the rand and increasing inflationary pressures. Secondly, reduced foreign direct investment as South Africa relies on FDI to fund its infrastructure and job creation. A decline in American investments could slow economic growth and employment opportunities.
She stresses the urgent need for a clear and proactive policy response from the South African government. As debates continues over the potential economic fallout, all eyes are on how South Africa navigates these external pressures while maintaining investor confidence. From Johannesburg, South Africa, Innocent Samosa, Channels Television News.
All right, let's head straight to the markets now. We have Ini John McCraw with the details. Great to have you, Ini. It's another day, another naira or dollar, whatever you're trading.
Yeah,
at this point.
or both.
Or both.
Yeah, making money as well as it's a valuable currency.
Exactly, as long as it's valuable, because we're seeing the currency moves already happening, even in the US, with the US dollar getting stronger.
Yes.
With all the tariffs.
President Trump is doing that, especially the latest one, the aluminium 25%. Doesn't matter where you're coming from. If it's coming into the United States, there's a 25% tariff on it. And I wonder what retaliatory actions or policy we will see following that. That, of course, is going to be the conversation in the next couple of days.
Right, so much to look out for. I have my popcorn, at this point.
All right, good afternoon, everyone. Let's do the markets now. And starting, of course, from Nigeria, we see a sustenance of the 100. It looks like the market hasn't moved from yesterday. Analysts did say yesterday that we should expect a sluggish market, and that's what we saw, because remember that at this time yesterday we were at 105,900, and we're still there. Even though at intraday we see a green of 0.07%. But let's find out what's happening at the NGX at this time. We have Afolabi Benro joining us right now. Hi, Afolabi. Good afternoon.
Good afternoon, Ini. Thank you for having me.
Good to have you. So it does look like it's a very slow-moving market from yesterday till today. What's going on at this time?
Yeah, you're right. The market is actually very quiet today. We are seeing an uptick in activities, mostly from the banks. At least over the past week or so, the banks have been the major drivers of activities in terms of volumes. So the likes of GT, UBA, Zenith, we've seen activities there. Today we're seeing lesser activities, although they're still the major drivers of activities. In terms of price movements, we note that Dangote Cement has gained about 5.3%. It's now currently at 414.90. Transcorp is also on full bid. It's up about 10%. We haven't seen any news that's driving that so far. Like I said, the banks are still the major drivers of activities, but we're still seeing a moderation compared to yesterday.
Yeah, so there are news streaming in about the implementation of the telecoms 50%. They were waiting for final approval on their products by NCC and all of that. And we're beginning to see news pop up from here and there that implementation may have started. Can that in any way move the stocks in the market?
Yeah, I mean, if you look at the likes of Airtel Africa currently is on full bid. About 1.4 million shares is on full bid now. We're not seeing any supply coming into the market in Airtel. And then, interestingly, I think I was trying to buy some data today, and I could see an uptick in price in the pricing of the data. So that could speak to the question that you're asking, whether we have started seeing the implementation of the new tariffs coming.
Yeah, but this should give investors more confidence about the sustenance and survival of the companies vis-a-vis their investment.
Correct. I mean, the whole reason that the telecom communications companies were pushing for the increase was because looking at Nigeria, the way it's been over the past couple of years, prices have increased, and if tariffs have been held at a certain level, companies were saying that it's basically not sustainable for them to continue business that way, and they were pushing for that increase. So in the long run, we're seeing it as a positive in terms of earnings for the companies, which should definitely benefit investors in the long run.
Now, I know another thing that's been moving the market in the past couple of days has been the results, especially some of them are full-year results. Is that the result, the release, is that over? Are we expecting more? Can we expect investor sentiment to be swayed by that?
Yeah, I mean, generally, this is the period where investors start to take positions ahead of upcoming full-year results. Full-year results are the ones that come with corporate actions, which means more money in terms of dividend paid out in the investors' pockets, and that usually excites investors. So usually around this period, we see a lot of investors basically trying to take positions ahead of those results that will be released in anticipation of the corporate actions that will come. We expect those results to come out anytime between now and the end of March. So definitely this is the period where we'll continue to see interest based on the anticipated results that are coming into the markets.
So how do you expect the market to close today? Still another slow day, ending slow?
Yeah, it still looks very slow. We're not seeing any other new catalysts that have come in so far. We expect that the trend we've seen so far today will continue to the end of the trading session today.
All right, Afolabi Miro, thank you so much for your time and analysis this afternoon.
Thank you for having me.
Now let's look at other markets. Now we see in South Africa, it's a negative market at intraday 0.48% in the red, 87,347.88. And then in Egypt, closed negative 0.45%. Kenya, however, we saw a bit of, recovery, if we could call it that, at the close of Monday's trade, but it's still on 129 level. So not a lot of movement has been recorded there, but we hope that they do have that. Moving over to the Middle East, we see that Dubai and Abu Dhabi are positive this afternoon. More than 1% for Dubai at 5,317.89. Abu Dhabi 0.16% at 9,466.46. The other markets in that region, Saudi Arabia has the Tata Wool there in the red, while Qatar is 0.43% in the green. We move to the United States. That's where action is coming from and hitting the other sides of the world. Because of President Donald Trump, we see that stock futures traded lower earlier today. Investors are looking for that key inflation data. I know Ladi talked about it earlier. Expectations around that, and of course that will feed into the decision of the Fed, and then either a stronger dollar and the adverse effect it will have on other currencies. So the market obviously and investors are really looking towards that. So we see the red Dow Jones at 44,482, S&P also red, NASDAQ features which had recovered, and we thought we could have a little bit of stability. We see it in the red this afternoon, 0.45% at 21,748.50. And President Donald Trump signed an order yesterday evening, that 25% tariff on steel imports, and everybody's reacting to it. I believe we'll have more. Both levies, that's the 25 on steel and aluminium, take effect from March 4. But the market is pricing that in even before that. And then from there, we go to Asian, see what's happening in the Asian market. Nikkei is green this afternoon at their close of trade, 0.04. The Kospi of South Korea also green, comfortably green. I guess I can add that. And then for Hang Seng is in the red. It's still the mover around here is still President Trump's tariff campaign. And looking at other parts there, we see Japan is closed for holiday, we're told. And then the Nifty, we expect it to be in the red because in spite of the buffer coming from their central bank, the Indian central bank, we saw that the rupee was still doing badly. So that's, of course, is spreading to other investment scene. And that is what we see, this very red color for India, 1.32% red at the close of Tuesday straight. So that's how the market is looking, Ladi. I think some things have been happening in India. We don't give a lot of attention to it, but I know they had a budget talk and then the CBN had to intervene with their currency, but the markets and investments around there seem to be struggling in the last couple of weeks now, and we see that reflecting in
that
the
bullish
Nifty 50.
sentiment we're used to it for the Nifty 50, that has switched, so
Yes.
far. And I guess for smart investors, at this time, you just put Donald Trump on, speed dial. Anything he says, anything Donald Trump says, right now.
Well, I guess it depends on what part of the world you're at.
If you're trading the global market, you have to put everything, whatever. You have to put that on your
well, I guess, I don't know if the dollar is too strong now for investors to look that way.
The dollar,
because all of this has
overbought on most time frames, at this
but not
point.
in Nigeria.
It might
not in
continue.
Nigeria, Ladi.
Never
overbought in
the
Nigeria.
naira is stable at this point. Thank you so much, Amy, for giving us the details. And yes, it's still all about President Donald Trump. Now, let's take it on to London. Let's get reactions. We have Juliana right there. Great to have you, Juliana. So it's official, another 25% import tax on steel and aluminium there. So how is UK Steel and that industry reacting to this?
Not great, I've got to say. Good afternoon, Laddie. And it's quite interesting in the UK because this conversation has been split into the business commentary and the political / diplomatic commentary. So we have heard from the UK Steel's chief, Gareth Stace, who has basically accused US President Donald Trump as putting a sledgehammer to the steel's industry. He says that there are going to be massive ramifications across the whole industry. And of course, he is speaking on behalf of UK Steel. So I think it's fair to say that most within that sector feel exactly the same way any steel importer across the world is feeling. And they are going to be speaking with UK ministers in the Palace of Westminster much later on. So I suppose there will be further development on that narrative tomorrow. But what is quite interesting is kind of the clawback from Rachel Reeves, the Chancellor of the Exchequer, as well as the UK Prime Minister, Sir Keir Starmer. I heard you having a little joke there with Innie about how world leaders are treading very carefully with Donald Trump, and no much more so than in the UK. This kind of started off last week where the tariffs were first announced by the President towards the European Union. And at the time, Sir Keir Starmer was in Brussels for an EU summit, and alongside Olaf Scholz, the German Chancellor, and French President Emmanuel Macron, when the press were asking for his response to these tariffs, he was very, very careful. Of course, he was in Brussels trying to appease Europe, but he didn't want to tick off his closest ally, which is Donald Trump. Now, Rachel Reeves this morning has also doubled down on Sir Keir Starmer's shall we say, careful response by saying this morning that she does believe the UK may be, shielded away from these tariffs. Now, we did hear Donald Trump say yesterday, perhaps, that Australia may be exempt from the 25% on steel because of the trade balance. It's not as imbalanced as it is in other countries. And Rachel Reeves used the UK within that similar case study. So we shall have to wait and see. But as I said, I think the UK now being very careful not to offend Donald Trump. How is this going to work in the long run, right? You know, this is a new world order. Every statesman, political statesman, should have an equal say. But at the moment, I think playing the diplomatic line is going to be safe for the UK economy.
Right. I guess most countries will be wondering now, retaliate or negotiate at this point. So much, to think about. All right. We're seeing Robinhood. They're in the news today. They're launching an options trading in the UK. How's that being received?
Yeah, that's right. Robinhood, a pretty popular investment app based in California, have announced that they're trying to expand, shall we say, their footprint in the UK by offering UK traders the option to trade on US options, which the UK regulators have been quite careful about, because we know that if you trade on options, you basically not own in the stock, but you can trade on when it goes up or down, seen in the UK by the FDA as being quite risky. But, there are players already in the field, and Robinhood have announced that they are now joining them. And in the press release that they put out this morning, it also mentioned that perhaps they will be offering some sort of saving ISA for UK customers. So, yes, if you're a stock lover, a trader like you, Laddie, this is good news.
Yeah, but definitely betting on an asset class going up and down is so risky. Definitely, because you lose your money if you lose. At this point. But how are the markets looking?
Not great at intraday. I think the Trump threats has threatened the highs of the market. We also had a trading update from BP. Their profits have slumped in the final quarter of Q4. That pulled down the all-share at intraday, so it's down 0.04%. The FTSE 100 blue chip index also down 0.01%, and the FTSE 250, the domestic market, down 0.13% at intraday, Laddie.
All right, thank you so much, Gillian, for giving us the details of what's playing out in the UK. Thank you. All right, let's take it on to Europe now. We see France's much-touted AI Action Summit in Paris. That ends today. While previous global AI events have focused on regulating the technology, it looks like that could be changing at this point. Let's bring in DW correspondent Chipondo Chimbelu. Great to have you, Chip. How are you doing?
I'm great, Laddie. How are you?
I'm fine. So it's all about AI again at this point. What has been the focus, of this Paris AI Summit?
Well, Laddie, for tech executives attending the summit in Paris, it is really an opportunity for them to push for less regulation for artificial intelligence in Europe. Now, last year, the EU adopted the world's first and most comprehensive rules governing AI. But the bloc may be under pressure to change its rules. Now, AI players have been complaining that compliance is expensive. And of course, recently, US President Trump tore up his predecessor's AI guardrails. And we did see earlier today when his vice president, J.D. Vance, spoke at the AI Action Summit, he did mention that as well. And of course, Trump did that just about 2 weeks ago, while announcing an eye-watering investment of $500 billion in AI over the next 4 years in the Stargate project. Now, that was, of course, significantly higher than the 1.5 billion euro investment in AI that Brussels had announced in December. But EU countries are trying to catch up now.
And how is the EU trying to, keep up with all of this?
Well, Laddie, on Sunday, French President Emmanuel Macron announced that the private sector would invest a total of 109 billion euros in France's AI sector. Now, a big chunk of that will actually come from the United Arab Emirates, which will invest up to 50 billion euros in the coming years. Now, another outcome of the AI Action Summit in Paris is the launch of a partnership called Current AI, and that includes France, Germany, and some industry players like Google and Salesforce. And that initiative will start with a $400 million investment, which will be ramped up to $2.5 billion over the coming years. Now, while these amounts of money are less significant than the $500 billion in the Stargate project in the United States, they are still significantly higher than what was announced last year in the EU. And it could be a sign that the tide is turning here in Europe when it comes to investment in AI. But a big question is how the EU will proceed with AI regulation. And it will be interesting to watch which way it goes, whether it will merely try to keep up with the US or embrace a different approach to fostering AI investment and innovation.
So how are the markets looking in Europe? We're seeing, the hammer on most of the markets that we track.
Well, Laddie, European shares are largely unchanged today, and the Stoxx Europe 600 is flat, and Germany's blue chip index, the DAX, is up about 0.1%. And that was, of course, after it reached a new intraday record high. Now, investors are trying to figure out what an escalating trade war could mean after the United States President Donald Trump announced higher tariffs for steel and aluminum imports. European steel accounts for around 15% of steel imports in the United States, and the EU has said it will retaliate against the US steel and aluminum tariffs. Germany's steelmaker ThyssenKrupp is actually down on the stock exchange, is trading around 1.7% lower today. Elsewhere today, in terms of what investors will be looking at, they'll be on the lookout for US Fed Chair Jerome Powell's biannual policy testimony. Now, they will be listening in for his comments on Trump's trade policies and its applications on the U.S. interest rate outlook.
All right, so much to look out for, and investors will be watching out for what Jerome Powell has to say. Thank you so much, Chapata Chumberu. Thank you.
Thanks, Laddie.
All right, let's get a check on what's playing out with aluminium. At this point, is the second most consumed metal globally after steel, and is widely used in developing countries like Nigeria for construction and infrastructure. That's including roofing sheets, beams, panels, window frames, name it at this point. Let's bring in Tomiwa Ajewole now to bring us up to speed. Hello, Tomiwa.
Good afternoon, Laddie. Thank you for having me.
Yeah, so for 2024, we see aluminum prices were up about 7.5%. And another 5.5%, this year, reaching about $2,636 per ton. Is this all on, what's playing out right there in the global markets?
Yeah, I mean, if you look at the prices, as I just said, in 2024, up 7.5%, 2025 already up 5.5%. And, we are seeing some factors such as supply chain disruptions, especially a raw material tightness is what's happening. But looking forward, what's happening now, the 25% tariff on aluminium by the US, and we expect this to have more of a significant impact on the US domestic market than the global market. But for the global aluminium market, with the tariff, what it does is that most of the exporters of steel to the US, such as Canada, would have to find new markets for their aluminium. So this will lead to an increased supply in aluminium, and that will help to bring down up to lower aluminium prices. But when we look at the fact that US just accounts for about 6% of global aluminium demand, and that's not accounting for and that's again we have to account for the fact that they produce themselves. There will be little increased supply in the total market, so there may not be much of an impact on prices. But in the next 3 to 4 months, we're looking at possibly a Russia-Ukraine resolution, and Russia is actually a top aluminium producer globally. So this could also help to bring down prices. So in the near term, the picture is not clear yet. We could see prices come down a bit.
How do you see this impacting demand for aluminium in Nigeria?
Yeah, so Nigeria technically is a net exporter of aluminium, but most of the aluminium that we export are the raw aluminium, unwrought aluminium. Meanwhile, we import the finished aluminium products, such as the ones that we use for our roof and windows and doors and buildings. So what we've noticed is that there's been a decline in the imports of the finished aluminium in Nigeria, which could mean that demand is reducing. One of the reasons for this obviously has been the exchange rate instability, the high interest rates, which has dampened investors to want to go ahead to construct buildings. So we've seen a slowdown in construction because of the harsh business environment. But now that the exchange rate is stable, with the likelihood that interest rates are no longer going to go high, and with the likelihood again that aluminium prices will come down, we may see an increased demand in the construction. We may see a growth in the construction sector because demand, it will be easier to get aluminium, which is going to help for our roofs and doors and buildings.
All right, I guess hopefully not another excuse for prices of real estate to go up in Nigeria again. But we'll keep tracking these prices as the trade war continues. Thank you so much. That was Tomiwa Ajewole, the analyst with Financial Derivatives Company.
Thank you.
All right, so recently, that was I think last week, Uganda's police, they detained about 9 finance ministry officials as part of an investigation into accusations of hacking the central bank's electronic systems. That resulted in theft of about 62 billion shillings. That's approximately $16.87 million, and that's a central bank, right here. So let's discuss this now and other matters that have to do with cybersecurity in the finance space. Join us is Innocent Paul, who is a cybersecurity business analyst. Hello, Innocent.
Hello, thank you very much for having me, Ladi.
Right, so this is the central bank we're talking about here in Uganda. Should African central banks be worried, about this? For a central bank, getting hacked and, that much money, about $16 million, lost.
These cybersecurity incidents appears to be, a case of an insider-assisted financial cyber haste, if you ask me. Involving compromised banking IT systems and, unauthorized electronic funds transfer. If we look deep down into some of the key characteristics involved in this, we will be looking at, some of the key areas like the, bank, system intrusion, maybe the insider involvement as well. And then we're also looking at the unauthorized funds transfers. And then, the state's financial level involvement as well is also a key area for us to, also look into. And then a possible use of, APTS, which is advanced, persistent threat of, a banking system, or you still refer to that as, a banking malware. So if we deep dive into all of these, and analyze them further, for example, the bank, system intrusion, the hackers, alleged, operating under the alias of waste, compromise the bank's IT systems that's already indicating a breach in, financial infrastructure. If we also go deep down to also look at the other area, which is the insider involvement, the fact that 9 finance, ministry officials, including senior treasury personnel, have been detained, suggests potential insider collusion or maybe even, negligence. So insider often play a key role in haste like this, providing privileged access, or maybe even credentials, facilitating fraudulent transactions. So these are often some key areas that we ought to look into. And then, unauthorized funds transfer as well. The attackers allegedly stole 62 billion Uganda shillings. That's a whole lot of money, Ladi. If we convert that to dollars, that's running into millions of dollars. That's a lot of money, implying they successfully executed these fraudulent transactions or manipulate the banking records to siphon the funds.
Right.
These are very big issues.
Yeah, that's definitely a lot of money, and most of these financial services, companies, they spend a lot, on cybersecurity. Would you say they're spending enough, at this point? And how do you protect against insider compromise?
Yeah, so one of the key things to look out for is training your staff. Industries needs to look into educating their staff about some of these threats and potential incidents that could occur, that could even run the companies and organizations down and cause huge financial losses. Some of these could obviously teaching and educating the organization staff to understand some techniques obviously used by these attackers, which of course is one of which is email phishing, where they come into systems pretending to be what they are not, and then obviously you don't know what's going on, and then obviously you go into these emails and go into these systems thinking you're actually interacting with some legitimate persons. And then obviously there are some malicious tools embedded in some systems that just takes over everything, and before you know, everything is gone. So these are some of the critical areas that we do need to look into.
Right, and it's still early days in 2025. Do you still see more of these attacks coming, and what do you think should be the direction at this point for most of these financial services? Because having a central bank being hacked, that's huge, because that's supposed to be the banker's bank at this point.
Yeah, delayed detection and response is one of the key areas as well that we need to look into, because incident response is one critical aspect of cybersecurity, I must say. If the attack happened in 2023 and arrests are happening in 2025, that indicates a prolonged investigation, suggesting either a sophisticated invasion of tactics by these attackers, or challenges in tracking the stolen funds, and these are loopholes and areas that we need to look into.
Right, so much to look into, and look at it from an African perspective. Would you say Africa is getting better when it comes to cybersecurity and getting that enlightenment for different sectors and industries?
Yeah, cybercrime in Africa is escalating rapidly. In 2023, African businesses experienced, say, around 23% in weekly cyber attacks, which is obviously still a lot. These have also increased over time anyway. So compared to previous years, this has marked a rapid growth globally. So if we look around somewhere, for example, and things like business email compromise, which is obviously among significant threats, factors such as digital illiteracy, like I did mention earlier, outdated infrastructure, and a shortage of cybersecurity professionals contribute immensely, in this, continent's vulnerability. And these are really big issues. These challenges pose substantial, obstacles to Africa's economy.
All right, definitely. We need to look out for that, in 2025, to make sure that Africa gets protected, in that cyberspace. Well, thank you so much. That was Innocent Paul Ojo, cybersecurity business analyst. Thank you.
Thank you very much, Ladi. Thank you for having me.
All right, let's get a check on what's playing out in the crypto market. Now, we're seeing green on the screen, at this point, shows investors are getting bullish again. With the market, with Bitcoin climbing over $97,000, holding up 98,000, 0.22% up. And, most coins that we track on CoinMarketCap looking quite good. But Solana, on the flip side, that's been getting most of the attention. But we're seeing a pullback for Solana. That's 0.73%. Let's look at the sentiment in the market. How are investors feeling? Are they afraid? No, they're neutral at this point. 43 points over 100. And if that keeps going down, then it's getting into the fear zone. And we know some investors like to buy when the market is fearful. All right, let's get some headlines now. See, Grayscale, they filed for a Cardano ETF. That's with the ticker ADA. Grayscale Investments, they're aiming to launch a Cardano exchange-traded fund on the New York Stock Exchange. That's according to a document posted on the NYSE website. The form is showing that it was put up there on behalf of the issuer. So that's an indication, and that's why we see Cardano went up about double digits today. Then a meme coin, a 4.meme, they've temporarily halted the liquidity. Hackers exploited the meme coin project on the BNB chain, stealing about $183,000. In response, the meme coin, they launched meme coins there. So they've halted the creation of new liquidity pools. The hackers specifically targeted 4.meme. That's the meme coin on that platform. So we're talking about cybersecurity. That's also needed right there in the crypto space, with some of these platforms, being compromised. So, well, Bitcoin still looking good at this point. That's not the bearish news, definitely for the market. But we know hacks happen in the crypto space every now and then. But we'll keep tracking to see how it plays out. Tomorrow again, we'll give you a summary of what's playing out in most of the markets that we track. But the crypto market still stays bullish at this point. So that's the show today. Thank you so much for watching. We'll give you more updates tomorrow from me and the team right here at Channels HQ. It's bye for now.